have Seun Ameye, he's a fixed income trader at CITI Nigeria. He joins me now to share his take on the decision by the Central Bank Monetary Policy Committee. Thank you so much for your time on the show today, Seun. Looking at that decision, nobody definitely has a playbook on how this year 2020 will play out, and it has been the Central Bank even admitted to the fact that the MPC was confronted by a policy dilemma. But what is your take on this decision to cut rates at a time like this?
Thank you, Kenneth. I think the major thing we should look at here is the central bank concluding that the recent inflationary pressures we are seeing was not due to monetary factors. Now, it depends on where you are, on what your views are. That is the basis of this decision. Before now, the market expected that the balance of inflationary pressures and a decline in growth will lead them to hold rates. But now, they are just saying that the inflationary pressures are due to structural or supply-side factors, which monetary policy cannot do so much about. That's the conclusion of the central bank, and they are focusing on growth anyway. That's the supply to the market. I think we will definitely see a reaction in asset prices tomorrow when market opens.
Yeah, but how do you think this reaction is going to go?
Well, I think prices go up. Asset prices go up. We'll see prices on bonds and yields on price on bonds go up and yields on T-bills will drop. That's definitely what's going to happen, because the market now expecting more liquidity into the money market. Even without that, the signaling itself, the market takes a key from signaling, and we likely see prices of bonds go up tomorrow and yields on T-bills drop. Really, that's what I expect tomorrow.
All right, but looking at the currency, though, and how things will play out in the near term, we saw the central bank try to resume sales to the BDCs, and we saw that didn't do so much to bring that convergence in the rates. But what's your take on how things will play in the near term on the currency?
Well, dropping interest rates in the kind of situation we are in will definitely not encourage more of foreign, at least portfolio flows into the country, and it also will not reduce the pressure on foreign exchange. But I think the CBN is counting on the fact that because they are also a major supplier into in the market, that really their decision to cut today is not going to affect the exchange rate so much. Like I said, the decision today all boils down to the conclusion of the central bank, whether you agree or not, that the monetary factors have nothing to do with inflationary pressures. Therefore, consequently, they have nothing to do with the kind of demand we are seeing on foreign exchange, that they are all structural issues. So really, by the way the CBN analyzes it, it's not going to have a material impact on foreign exchange if they choose to cut or a hike rate at this point in time.
All right, but Seun, liquidity has been a major theme in the money markets in recent weeks, and then how do you think this is going to impact that play, especially when you look at decision first on the rate cut and also the adjustment in the asymmetric corridor of the MPR?
So basically, been seeing asset managers and banks pouring money into OMO bills. OMO T-bills on 1 year maturity are trading about 2.93%. They're about now, which is a long way from where we're coming from. So I think that's going to continue, really. The impact of creating more credit that's going to happen over the next couple of months, medium term, really. So for now, I think asset managers and banks will just pour money into fixed income securities. That's what I expect.
All right, now going into next week, though, what's your take and call on yields?
Well, we have a bond auction tomorrow. There's about 1.5 billion of bonds being offered. The result of that auction kind of sets a tone for what we expect. We expect in the next week. Also, we have about 300 billion of over maturity. So really, you can basically say we're going to have liquidity in the money market. And like I said, those money will be chasing the fixed income securities for now.